Good morning, everybody. Just let me know if you can hear me okay, if you can see everything okay. Definitely a very interesting reaction to the trade deals and some of the things that have been going on. You can see there's an SMT here. We had a gap higher. Price came all the way down, closed in the new week opening gap, and then rallied up. And now we're reaching down into this gap in here. Nothing is telling us that buys are going to stop, unless of course we were to break down and get back below this area for the Nasdaq. The bonds and yields are anticipating what's going to happen tomorrow. Because there's the rate announcement tomorrow. Yesterday was kind of a shit show. And then of course today, given the fact that it's NFP week, we're almost to the end of the month, pretty much at the end of the month. And then we have just a flurry of very high impact announcements coming out. Until these announcements come out, it may be a bit shaky in terms of clarity. We have an idea of where price is still going, right? We do have now cracks in correlation across the board pretty significantly. Like the currencies are dropping very aggressively off the heels of DXY giving this extreme run higher. It's now basically broken through this high, which I said if this high is taken, it'll probably look to reach up into here. Okay, this here may become a type 2 dealing range. We already have fair value gap, order block, and a high taken now. Okay, so with this high being taken, I'm pretty confident that we should be able to have enough of interest to get up above here. We have the wick quadrant breakdowns we could put here. So price is going to reach into 25, then 50, 75, then 100, or the full high. But as of right now, I'm curious to see if we can get this to break down. We also have an SMT at the highs. Go from this high. You got a lower high in the S&P and a lower high on the Dow. And then we kind of have this breakdown. Okay, we got relative equal lows down here for the Dow. It's done a decent amount of work above this fair value gap that's over here, right? All-time highs. We took it out once, gapped above it twice, and then now it's kind of broken down below some of these other levels. So we're going to wait for the news initially. All right, we want to see what the manipulation is going to bring. So far, if we go to the DXY and the Nasdaq, so far we see that there's the open price, right, happened on Sunday. So the close on Friday, open here. It navigated around, dropped down, closed in the new week opening gap entirely, and then we finished off at another all-time high. So we got to see what it's going to do in here. Okay, going into the manipulation. One thing I want to mention, when there's no news, there's generally, for the most part, going to be no manipulation. Okay, so when there's no manipulation and institutional sponsorship, which is what the news presents us with, it could present us with a problem. All right, so you got to proceed with caution. You got to cut your risk. Can't be a psychopath lunatic looking to take a trade on just anything, unless you want to lose your money and then feel like trading's impossible and all that. So we got 1, 2, 3 drives into the buy side. DXY is still pretty much on a rampage. We do got relative equal lows here, but for the most part, we'll think about this later if it does want to go down there. For the most part, at this moment, it doesn't look like that's going to be the case. It looks like we've just accelerated. It is a bit suspect to see such a quick early response like this. A lot of times price will turn around against that. It has not done that. It's been very, very dramatic to the buy side because of the trade deals. And the reason that I feel the indices haven't fallen, right, in alignment with this stuff, is the fact that the trade deals impact all U.S. interests. Okay? It's positive across the board for the whole financial realm of the United States. So it's pretty much, held price up. And we've just been continuing to push. So we're going to see what happens here with the S&P. Like I said, there's a SMT at the highs. So if we get a breakdown and price sweeps below this low, that may set the stage for us to have a pretty significant decline, maybe even all the way down to here. Right? And then whatever price does in there, if it was to turn this to an inversion, then that would kick me into a overall bearish perspective. Notice how the low here that was set before we expanded happened within the 20th and 60th day. So it stalled out, and then into the third quarter, it left a low within the 20th and 60th day, and that's when things took off. So a lot of times, pretty much every quarter, every 3 to 4 months, there's going to be either a change in the sentiment or price is going to accelerate and basically continue whatever it did. It'll go against it for power 3 for the quarter, and then it'll push away either against it and shift the market structure to give a quarterly shift, which didn't happen here, or it'll do something like this and continue the trend. Right, but it'll go against it first, and then it'll shift. Right, so this is a shift. Right, it's a quarterly shift into the 20th and 60th day range. Right, and you can see the low, and then we've been just accelerating with all the good news as a result. Okay, so again, since there's been no news yesterday, a lot of people lost. Right. In my private group, we talked about not taking a trade, and we didn't execute because we knew the environment. That's the benefit with having someone that knows how to navigate certain terrain, certain conditions. So you don't have to learn that by pain. You can learn it through just listening to what's being said, what's being taught. All right. So yeah, and again, there's just a flurry of heavy news coming this week. And then it's going to also lead to a lack of news. All right. So during this time, next week, we're going to be half risk, 1 to 2 trades. Only, at least in my mind, I'm probably only going to take any trades or consider taking trades Tuesday, Wednesday, Thursday, because those are, generally the best trading days. And then, of course, think of Power 3 and all the other things that we talk about. All right. But yeah, so for today, we have news at 7. Price is just accelerating. There's no real reason to think that it's going to short. It could, but we don't pick tops. So it's going to have to break down pretty severely for me to want to really participate in some type of short. Friday's lows down here, so maybe it wants to get down there if it breaks down. That would be my goal if price gets down below this wick. Because then that would be basically a run on stops with an SMT at the highs and then a shift in market structure on this upper time frame. Obviously, there's early signs that we can get involved with to then target this, but we're going to have to see how the session plays out, see if that's something that it wants to offer us. But for now, we're just going to continue to push price to the buy side. Right? If it does drop, and say it targets this low, like I mentioned, could be the case, we could then classify this as a possible market maker sell model. And if we get down below this low, the intention will be to target the weekly fair value gap. Good morning, Mike. Good morning, Tony, Joan. Don't forget to like the video, subscribe to the channel if you get value from the content. Just as a reminder, it helps me get in front of people just like you. And, we play a role in helping people not blow their accounts. If, at a minimum, that's all they take away from things. You learn how to not blow your accounts when you spend time here. I am just tired of doing this, Guru says. I'd like you to be more specific. Maybe there's some issues I can help you overcome. But that's a good thing, actually. If you're getting bored, if you're just getting tired of it, that means that you're not going to be so emotionally charged eventually. It's kind of a weird perspective, but as you gain more wisdom, you start to realize there's certain things that you're not aware of. And, this topic being one of them. People ask, how do you desensitize yourself? Once you become bored, sick of blowing accounts, sick of breaking your rules, you start to open your mind to different things that you probably weren't paying attention to, with the flurry of ambition and unrealistic expectations. The market will force you to be realistic, and sometimes you can't take a trade, or you shouldn't take a trade because of conditions. For one, maybe you haven't navigated them yet, right? Or haven't had enough experience navigating changing conditions. And then again, like I said, you'll get tired of breaking your rules. So yeah, if you have any specific things you can highlight, maybe I can give you some advice. But lower your expectations on weeks like this. When there's no news, lower your expectations. When there's holidays, lower your expectations. When we're in January or December or, summer months like we've been in for the last 2 months, going on 3, lower your expectations. If you started trading thinking that you're going to retire your family and quit your job in 2 months or in a year, just realize I've been doing this for 6 years this year, and I thought that way too. And, come to find out 6 years later, that's, those expectations are part of the reason why I had a hard time in the beginning. And I put so much pressure on myself, and I invited the issues. So I'm trading market maker model at 9:30. Good result, but my main problem is over trading in the funded account. Yeah, well, the easiest way to stop over trading is to just not over trade. I can say that I tell all my students that over trading and over leveraging, no matter what you do, you will always fail. Over trading, over leveraging in the moment may seem like, oh, I'm going to repair something real quick. But if you don't have enough experience in managing your mindset and understanding your model and when to trade, when not to trade, how to navigate certain conditions, how to identify the conditions you're in, and whether it's a worthy time for you to push or pull back, if you don't have that wisdom, again, over trading and over leveraging is going to destroy you. It's going to make it so this takes longer than it should. And it's a headache. Imagine if you had to focus on trading solely for your income and you just keep over trading and over leveraging. Imagine how much stress that would be if that's one of your goals. So when you get to that point, eventually you want to make sure that you have these things removed. Over trading and over leveraging is never okay. It's never a solution. It may be once or twice, but there will be times when you get it wrong and you're just incorrect on your analysis. You have to plan for that. And by over trading and over leveraging, you're assuming that you're going to be correct when you may not be. I may not be. That's why I lead by example and never, ever over trade. Ever. Because that was a huge problem that I had to overcome. And the day that I got, like you said, tired of doing the same thing, sick of blowing accounts, sick of failing funded accounts, sick of having to refund things and work overtime and do all this stuff to simply put money in just to blow my account again. Once I got sick of that and started making these adjustments when I should have made these adjustments in the first place, things started to change. You could do one at a time, one thing at a time. Stop over trading in general. Try it for a week. It doesn't have to be forever. Eventually you'll get comfortable with not over trading and then it'll be forever. But you got to take baby steps to fixing these problems. Over trading and over leveraging, I don't care who you see do it. I don't care who tells you that it's okay. They're retarded. Okay, they're idiots, and they're trying to get you to probably buy something. They want you to be like a drug addict, because when you're over trading and over leveraging and you become addicted to that, it's just like being addicted to drugs, because it's pumping dopamine into your head, and then you want that excited feeling. You want to do it correct. You want that massive feeling of accomplishment, and it becomes addictive, and then you overtrade and over leverage trying to chase that, just like a junkie trying to chase that first high. They got to keep getting high, then they do it more, then they do it more, then they become a wreck. You know, over trading and over leveraging also, if you're in a funded account, if you're in a professional funded account like Top Step or Apex, I don't recommend Top Step anymore, but Apex, My Funded Futures, if you look like you're being reckless and over trading and doing too much, they will refuse payouts. So at the end of the day, whether you're going to teach yourself that that's unacceptable to do, or someone else is going to tell you that it's unacceptable to do, like a funded account that denies your payout, eventually you're going to have to submit to it. How long that takes is different for everybody, because we're stubborn. It took me a long time to get over the things that, I thought were correct when I didn't know anything. And then I look back and, the best thing I can do for you guys is tell you this perspective. Whether you take it or not, it's going to be dependent on you. But I guarantee if you just slowly implement some of these things, these small adjustments can have huge positive impacts. And no, overtrading and over leveraging will not fix things, and it also won't get you to where you're trying to go quicker just because it feels like it is, because you feel like you're doing more. That feeling is playing by the market's rules. Overtrading and over leveraging is playing by the market's rules, and they want you to fail. And if you don't want to fail, you don't want to follow advice of people that want you to fail. So just think about this stuff, maybe for like the next month, maybe next week, right? Maybe the next couple days. Take 1 to 2 trades. If that, I don't recommend you try to push anything during this condition. We're at all-time highs. Lots of trade deals are flooding in for the U.S. We have lots of news. We're in the summer months. Everything is against you right now. At least those that don't have the discipline to manage this type of condition or this time of year. All right? So just keep that in mind. It's like a new recruit in the army getting thrown into the battlefield where there's a bunch of savage commanders ready to blow your head off. You're not going to really succeed. You're going to probably get your head blown off in the first 5 minutes. So there's a lot of manipulation. There's a lot of, things that are against you as a new trader right now. So, you're either going to be stubborn and do what you want to do. That's resulted in possibly negative results, maybe positive results. Or you're going to follow good advice that most professionals will say. It's not just me. I got this information, this perspective, this understanding from people that are ahead of me, that did better than me, that do better, that are much more dynamic, that have decades of experience. And until I submitted to that, and submitted to the fact that I don't know everything, and it's going to take longer than I thought it would, so I got to follow the rules. Until I submitted to that, things didn't change at all. And it's the same with anyone that learns from me, anyone that learns from ICT. It's the same for all of us, because we're human beings. We're stubborn. So some of us have to have more pain than others. Some of us right out the gate listen to good advice and start doing very well, like some of my students. Some ICT traders, we're all ICT traders, right? But we all have different styles. But yeah. I'm new to your channel, but can you explain what you trade? I trade market maker models, institutional order flow, entry drill, breakers, and continuation variations of each of those, plus the 2022 YouTube model. I'm not going to be able to have enough time within 10 minutes to explain my whole system. But since you're new here, hop on, right? Join us every week, and within a month you'll be able to catch on to what it is that I do. But first and foremost, because you mentioned what you mentioned above in the chat, my first advice to you is stop over trading and over leveraging. Stop doing anything that has to do with more than 1 to 2 trades. And if you're struggling, only trade with 0.5%. If you have a funded account and it's in the funded portion where you can make a withdrawal, do not overtrade and over leverage. Who's telling you to do that except your own ambition or goals to quit your job? One funded account, I can say, having one, given the rules that are put on top of us in every company, one funded account, yes, you want to celebrate it because it's a good accomplishment, but one funded account will not make you quit your job. At a minimum, it may make you have the ability to cut your hours, maybe cut a day out if you can make your daily pay per week. But yeah, other than that, there's no reason to to push too hard. So don't overtrade and over leverage. 1 to 2 trades a day, if it's necessary, if it's a good condition to do so. When it's NFP, FOMC, cut your risk and just relax. It's going to take you longer than you anticipated. It does for everybody. It takes longer than everyone expected. And nobody likes to hear that. That won't sell my private group. That won't sell a course if I had one. That won't, it's not the most encouraging thing. But I'm not here to entertain people. I'm here to give you the reality because most people don't. So, but then again, the ones that follow the rules, that listen to the advice that I give, those like Mike in the chat, Tony, specifically Tony too. He's passed 5-6 funded accounts this year since he's been here, taking good advice. And many more in my private group that are well on their way, just by taking good advice. I don't do a lot. I do enough, and I teach you guys to have that perspective too. Every trade you take, target 20 to 30 points and get out if you're just getting started or just trying to get your footing and get comfortable with what you're doing. If you can't get 20 to 30 points, there's no reason to even think you can get more. If you can't be profitable in 1 to 2 trades, why think that you could be profitable in 5, 10, 20 trades in a day? It's just, these are realities that we don't pay attention to because we don't want to hear it. But the market's going to either force you to hear it or it's going to force you to quit. So there's not a lot of wiggle room for unrealistic expectations and success. There's not wiggle room to justify both together. You have to have realistic expectations, and then until you gain until you gain the skill set you're trying to acquire, you have to keep things very minimal, very, very small at first. Funded accounts, if you can't prove 6 months consistency without overtrading and over leveraging for 6 months at least, preferably a year, but if you can't do that within 6 months, taking 1 to 2 trades a day, being very cautious, yet effective, in a demo for at least 6 months, there's no need to waste your money on funded accounts. And if you think, oh, let me go follow somebody and pass because of their trades, you're not ready and you shouldn't waste your money. Because then once you get the funded account and the person, say it's me, say I don't get online because I have something to do, you're going to go in and you're going to blow your account because you don't have the foundation. But that's why it's good to be around communities like this, mentors like I tried to be, because I don't play games. I tell you what you need so then you can grow. And then once you grow, you can and go on your own, then you do so. But that's a process. It takes time. There's things that you have to acquire in terms of skill set and discipline at the end of the day. There's no getting around it. And how long that takes you is going to obviously determine, how long this is going to take, And your sphere of influence, the people you follow, the information that you allow yourself to take in, it's going to have a very big impact. If you're around a bunch of negative people, if you watch a bunch of negative content, right, or unrealistic content, it does the same thing, right? It'll take you longer to have the right mindset, right? And again, most people don't talk about this because it doesn't sell things. I could care less. Okay, if people want to join because they see what I do on YouTube, they're going to join because they trust the skill set, and I've proven it to them. Not because I'm selling them fake nonsense that just sounds good. So that's why our community here on YouTube is pretty exclusive. But you're new, right, Guru? So you've kind of missed the last 7 months of us hitting an 88% strike rate, almost 100% in terms of bias and narrative on a daily basis. So, I can say that you've stumbled across a community that can very, very strongly help you, very effectively help you. So starting with today, right? Do not overtrade and over leverage. That's my first advice. If that's something you've been battling, you have to submit to the fact that that is why you're going to fail. Long term, you will never be successful if you overtrade and over leverage. I've never met one person that overtrades and over leverages that's a good trader right now that has succeeded. All of them have failed. I started with like 50 people. I'm the only one. Well, I'm like one of 3 people that still trades, and I'm the only one that does it, pretty much as much as I do, at the level that I do out of all of them. And that's because I'm the only one, aside from, the handful of others that are succeeding, that has chosen to follow the rules, that's chosen to submit to things that I felt were uncomfortable and, things that would take me back, right? Or remove opportunity. Like overtrading and over leveraging feels like you're doing something that you should do, but it's doing something that you're not supposed to do. Warren Buffett isn't in there trading thousands of trades. He's not doing that. He only makes, some of the most elite traders make 20% a year. Okay? 20 to 30% a year. We're over here trying to get 10% a month, 10% a day sometimes in some people's mind. Like, you could just see how unrealistic that is, but that's what sells courses. That's what gets people to join their groups and keep them on this high that is totally fake and doesn't do anything for them except gives them excitement, artificial excitement in the moment. And that's a huge issue in the trading community, and that's part of why I have this YouTube channel. That's why I have my private group. That's why, I offer my help, because I know that is something I was victimized by, So I'm trying to do my part to build traders that can help me get in front of some of the idiots that are the cause for the wrong mindsets being perpetuated. Right, so yeah, the first advice I can give you is to not overtrade and over leverage. If you watch me, I never overtrade and over leverage. See, and it's funny too, because the numbers will go up in the viewership, right? Say it'll get to 15, 20 people. And then once I start mentioning reality, people leave. That's why people fail. That's why so many people will never be successful at trading specifically, because they don't want to face reality. They want you to blow smoke up their ass and make them feel good, when feeling good is not, it shouldn't be the goal. Like, tell me what I want to hear. Okay, if I tell you what you want to hear and you don't have any experience, you're not going to succeed, because what you want to hear is you're going to quit your job tomorrow. You're going to quit having to deal with whatever you deal with, and it's going to all be okay because you had a good trading day, right? You made 10% in a month. That's just not the reality. So there's a lot of people that can blow smoke up your ass. I'm not going to be one of them. But that's why my students have a very high rate of success, So it is what it is. The 5% of people that succeed in trading versus the 95% that fail. I mean, that statistic is shown real time every day when someone talks about reality versus someone that, is entertaining or more entertaining or, blows smoke at people's ass. It's just the reality of this game. And it's honestly what makes it special to me. Because if you can succeed in trading, you are a very special individual. Because the sheep are going to follow BS to the slaughterhouse while we take a different route and succeed. And your version of success may be different than others. Watch this run on stops here. Let's see what happens with this. Whoops. Like I said, there's no reason to think shorts, at least for now, until with what we see here, if we lose this low, then I'll try to target these equal lows. But yeah, we're going to have to see what it's going to do. I'm going to continue to push for buys. Nothing's telling us to short, so what's the point in trying to demand shorts? DXY has been accelerated aggressively to the buy side, so I wouldn't be surprised if they now yank these people down by their hair and then rip the indices higher. Yeah, the Nasdaq is doing phenomenally well lately. So here's the regular trading hours gap. So the middle portion has not been traded to. We're above it. First presented fair value gap is printing. So we'll see what happens. We got to run on stops. Shifted market structure here pretty aggressively. We don't take trades at the 6:30 time. We wait. It's part of our rules too. No executions are taken within the 10 minutes before, 10 minutes after, sometimes all the way up to the first macro. I like to see the opening range. Right, but if you were aggressive, right, maybe you could have taken this, right? I don't advise it because it's against my rules, but hey, it's within the 550 macro, right? So that was decent, but I'm preferring to wait, you know, because as you guys know, I'm not in a rush, right? I want to make money. I don't want to be in a rush and lose money. Who wants to do that? Right, but that's another one of those things that people want to hear. Oh, the market's open. Oh, it's moving. Let me take a trade. I don't have patience to sit and wait. Okay. Well, you're going to have patience to wait 50 years to retire on not enough money. You know, so that's the reality if you don't want to wait, you know, and be patient. Even if you're long-term investing, you still got to be patient. You really got to be patient. If maybe trading ends up being something that is a little difficult and you want to find other options, well, no matter what you do, you got to be patient. All right, so yeah. Just some reality, right? Just some reality for y'all. Let me see, more decisive move today. Yeah, it is. It's definitely opened up. And why? Can you tell me why, Mike? Why would yesterday have been a day that is a lot less clear or volatile and one-sided than today would be? What's the difference? What was missing yesterday versus today? Same with last week on Thursday. All right, what was missing? Again, if it breaks down below this and gets below this, then that is the trigger for shorts. But if not, it's going to keep going higher. No news, Mike said. No news. Exactly. Red folder news. Yep. There was no red folder. There was no news at all. So no news equals low probability, like higher resistance, harder to trade, less willing to do one thing or another. It just wants to chop you up. You know. And then today, news is coming out soon, right? We're not even at the news yet. 6:30 is sent price higher. So again, because we have news at 7, I'm gonna wait till the 650 macro. See what we're gonna do around there. I don't feel like I missed anything. Like I said, there's an argument that you can make to have possibly entered here. Run on stops, right? Push against the higher time frame narrative to ahead of the open. Run on stops, higher time frame PD array, that being the fair value gap. Hit that, strong rejection, shift in market structure. Maybe you missed that. Okay, well, this high to the low should be a balanced price range. Did the middle portion come? No. So displacement again, there's another secondary opportunity, trusting that this would be a push higher. Right, so there's an argument for that, but again, it's outside my rules. It's there, yes. You know, the things I like to operate within, they're there, yes. But the rules aren't in alignment. Timing's off, different things are off. So, you know, with that being said, we wait. Did we miss something? No. Because the rules were not there. The model visually was there, right, for the start and then the continuation, but rules just don't align, so it is what it is. Yeah, you see the huge crack and correlation between the three. So yeah, prices moving higher in the Nasdaq. Things are rapidly racing to the buy side still. New all-time highs. That is the guru. That's the Nephew Sam fractal indicator. It's the only one that you should use if you're an ICT trader, because it's the only fractal indicator that shows you the 3-bar pattern, not the 5. The 5-bar fractal is not real. It's late. The fractal pattern, I can go into such great detail about it, but the fractal pattern has 3 bars that create a real valid swing high or low. It's not 5, which is what the normal Williams fractal indicator has. So that's what that is. If you want to look up something with ICT explaining a little bit deeper of that, you're going to want to look up the high probability scalping series. That's when he talks about the fractal pattern. It's the Nephew Sam fractal indicator. The name is over here. It says Nephew Sam. Right there. And you want to set the setting to 3 bars, not 5. But yeah, so we do have this rapid rampage to the buy side as a result of the 630 coming in. Okay, we see the open price here. It's had a little to no manipulation at all. Plus the crack and correlation, right? So this is not a condition where you go in and start chasing price. You know, like I showed a little bit earlier, there's that SMT at the highs. You know, so crack and correlation, you know, the SMT at the highs. We're ahead of a very important news event tomorrow, that being the interest rate either cut or increase, or it'll stay the same. Probably won't increase, but it will either be cut a little bit or it will stay the same. And it's going to be very, very important. You know, interest rates are extremely important. These things are waiting. They're waiting for the reaction, for the announcement. Okay, they're waiting. They're in consolidation, waiting ahead of that news event tomorrow. So again, the interest rates have a very strong impact on what we decide to trust. It's one of our main tools to help us trust the narrative when it's working out, right? Sometimes it doesn't correlate, you know, so we can't use it. We have to wait, but we keep tabs on it. We always look at it, and we'll see, you know, what tomorrow will bring for the interest rates. But here, right, I mentioned that if this high gets taken, we're probably going to slide up to the buy side up here. Okay, so now we got this wick. If price trades into it, as long as it stays above this area, we'll continue to push this higher. That's another reason why I do not trust this huge run higher here. And I'm unwilling to chase it. Plus the crack and correlation. Plus we see the currencies dropping, right? If the currencies and the indices are opposed to the DXY, they shouldn't be following, right? The currencies are doing what they're supposed to. So I'd say the currency markets are a little bit cleaner at the moment than indices right now. Correlation-wise, seems like, you know, delivery-wise. So you can make the choice if you do trade currencies. You know, you could try to participate in something like this. We've been talking about this potentially going lower. And this kind of confirms it, right? That it's probably going to continue to slide. Unless it breaks above this high to that low, right? Gets above the midpoint, this is going to continue to try to seek sell side. Especially with the DXY being on such a rampage. Go to this monthly chart. We could see there's a gap in here. We do have this breaker still, so it's trading back into that. But again, it's going to have to really commit and give some strong displacement to the buy side again if we're going to even look to participate in, or look to see it go higher, right? The currencies. Yeah, if you look at the weekly, right, got this big bearish candle. It's respected the mid portion of this order block here, so that is indicating, along with the breakdown below this low and this, that's indicating the price is interested in trying to target further shorts. That's going to have to shift again on this weekly perspective and get above this high, before I look to try to send this higher again, especially with the DXY turning the way it is. This is a very strong indication that it's probably not going to continue to drop. And that'll eventually, if that continues, that's going to eventually push into the indices, right? Because they don't stay cracked in correlation forever, and that's just not how the market works. Things are all connected, and when there's a crack in correlation, that's telling you something on the back end is taking place. There's massive moves happening. We've talked about the possibility of offloading of buy positions between the indices using COT analysis. As you can see, that has not really unfolded yet, but who's to say that they aren't building that position, given the fact that the COT still has that signature, given the fact that DXY is now exploding to the buy side, given the fact that the currencies are now continuing to tank aggressively like we wanted to see based on the COT we were talking about for the last couple of weeks. So this is what I wanted to see eventually manifest in the indices, but because the good trade deals and the impact that those trade deals are having on the U.S. economy, and just the anticipation for how good it's going to be for the U.S. And U.S. companies, the indices have had a hard time trying to commit to that objective to try to go lower. So as a result, because nothing has committed to that opinion, prices continuing to go higher. Because 3 PD arrays have not been violated on the higher time frame, we've continued to go higher, right? So it's just a testament to the validation and validation rules. You could see that they've been respected. So what's happened? Nothing has favored shorts. Short term, yeah, right? You could have made an argument to, catch a retracement or whatever. But at the same time, we see that the buy side is being continuously respected. So as a result, we hold on to that narrative, right? The bias has been bearish sometimes, right? Just to set up further buys, because the 3 PD arrays that we like to see, like that process has been respected, right? So again, as a result, you see what we've been seeing. The best opportunities have come to the buy side. So we got this displacement up here. So let's see, right? We'll see what happens. If DXY ends up rampaging through this high, this will have been a complete manipulation ahead of the news that's coming out in 20 minutes. Is the news going to come out and then smash price lower, right? I wouldn't be surprised, given the failure for these two to go higher, the S&P and the Dow, and the SMT that's at the highs between the indices. Okay, there's SMT here. SMT, right? Weak currencies, very extremely powerfully strong DXY, right? So yeah, let's see what happens here. So we'll see what happens, right? If it breaks down below this fair value gap in here, it'll go lower, right? Especially if the DXY rampage is higher. Otherwise, if it supports that, then we could potentially try to position to catch a buy a little bit closer to the news. I want to see what the news is going to do. That's why I'm waiting. You can kind of see why I'm not interested in trying to chase this. If I did chase it and try to get more than 20 to 30 points, which is your main objective at the moment, no more, okay? Because we're not in the condition that supports more. But if you wouldn't have, if you would have chased it and then didn't take down the 20 to 30, you would have been stopped out now, right? And you got the news to worry about, right? So if you're in the move and it's beautifully going to the buy side, for example, the news comes out and then it starts to kick in the relationship I was just telling you guys about, the possibility for this to go lower, then it'll upset your position, which is, if this does get down below here, that's all this was used for, was to manipulate people. The euphoria is at a maximum all-time high. Everybody thinks that, this is just going to keep going up. And overall, long term, it may continue to go up. Stock market has eventually ended up going higher at some point, right? Even with the biggest of declines. But that doesn't mean that there's no decline that could take place, especially in this moment, right? NFP week, lots of news, right? S&T, cracks and correlation, things like that. Kind of straighten this out a little bit. Right, so we have a lot of things that could go against this continuing, at least short term at this current moment, right? So we got to keep these things in mind. Okay, if we go to the 5 minute, let's see if there's anything we could watch. I think so. That's a 1 hour. No, so that is a 8 minute fair value gap within a 1 hour order block. Okay, so if this continues to drop, we'll see what happens in here. If we do get this to displace from this level and show that it wants to support that, we simply take this framework and we drop down to the 30-second, and then you try to find your model. This, in my opinion, looks like it's setting the stage for a potential market maker sell model on this lower time frame. But again, if it respects this level and continues to stay above this 1 hour order block and this fair value gap, right? We have a run on stops in here, ran to a discount. If we get a shift in market structure here, and then a fair value gap that holds, that could be a potentially aggressive entry. But again, we're ahead of the news, so I'm not going to even participate in that if it takes place. I want to see what's going to happen after this news event. We are in a time where we got to wait for the news. There's so many dramatic changes taking place that it's not worth rushing, especially if you got over trading and over leveraging issues or any of the impatient issues that plague you and new traders. It's best to wait. Consider this. Consider this perspective. You will thank yourself in a couple months, trust me, because things will start to change. Because your goal, if you're in drawdown, right, or losing a lot, is to lose less. And this is, part of that process of, losing less or learning how to lose less. If you have a set goal for the day, let me point your attention. So this here, if price was to break down below that, I would assume that this is probably going to deliver as a second stage distribution, and it'll probably look to try to fill in the rest of this fair value gap, right? So again, to buy, we're going to have to see this strongly respect this area. It doesn't look like that's the case. So I'm, somewhat leaning more towards price getting down below here, using this as a market maker sell model, possibly seeing this run higher ahead of the news as manipulation for the real move to then try to take out further sell side. So yeah, that's kind of my opinion. So yeah, if we get below this low here, I'm going to look at this as a inversion fair value gap first and foremost, but then also potential second stage distribution delivery, which those of you that use market maker models know that is a quick, very dynamic delivery if you're correct. And that's ICT's favorite portion of the market maker model, whether it's a market maker buy or sell model, the second stage distribution phase, because it's fast. If you're correct, it's going to be quick. It's not going to hang around. It shouldn't, just not do anything. It should quickly deliver. Otherwise, you're probably wrong. Right? So it's very black and white. All right, but you could see why I did not push for y'all to, chase it, or to push myself to chase it, or feel like I missed anything. It ended up coming all the way back around anyway. And again, we got that SMT, so keep that in mind. That's kind of back end information. So, like I said, if this is going to be true and deliver, it's going to be quick. It's not going to be slow. This is going to deliver through the lows quick, and we were correct yet again. Right? So you see why I didn't take a buy. Hopefully it made sense. And the different factors that kept me out of it. So I'm waiting for the open of the news to come out. I want to see what that's going to do. Okay. We don't pick tops. So, if this was not a top, like an all-time high, this shift in market structure here would have allowed for a potential entry, because there's a target down below this higher time frame fair value gap. Right, so this could have been an entry. Why? Because this shift below this low, right? The buy side delivery, sell side delivery. This low dragged over is a balanced price range. Yeah, super quick, right? Super quick delivery. Mike, you know the vibes. Okay, well, you're starting to know the vibes. We're generally correct. Yeah, I'm glad you guys got to see that and see the manipulation. Consider the timing too, right? Remember what I said about the open, right? And the fact that the news is a little bit later. So I used the 6:30 as a starting manipulation to ram up through buy side with the SMT at the higher time frame, and the price is now gravitated towards the middle of the regular trading hours gap. All right, so this regular trading hours gap plus the price action we see here mixed with the market maker sell model, the regular trading hours gap middle portion could be a reasonable target aside from the low down here completing the market maker sell model. Right, so yeah, we'll see what happens in here. Yeah, man, it's been crazy. It's been literally a crystal ball the last 7 months. It's just been pretty incredible. Really has. This last week though has been a lot slower. You know, you guys have probably noticed. Those of you in my private group, there hasn't been a lot to really gunswing at, right? Or throw trades at. There's been some opportunities, right? We pointed some out. But the conditions are clearly changing from what they were for the last 7 months. It started into June because it's a third quarter, and it is the summer months, right? So yeah, let's move up in time frame. Go see if we could find like a breaker or something from this delivery, which I'm assuming will be the case. So now we got the consecutive down candles here, right? So if this is going to go lower in any meaningful capacity and it's not going to want to go higher, it's going to respect this consecutive down candle delivery. It's not going to break above the middle portion. Again, we got news in 8 minutes, so I want to see what that's going to offer and if something can be shown around that time. Here, let me take this order block off. It's a dud. Let's go up a little bit. So it's a massive wick, came all the way up, swept those people out, then it returned right back to this fair value gap. So we got to see what this is going to do here. Right, if it does start to, give us a nice push that continues to go higher, then within that delivery, we'll try to see if we could frame out a market maker buy model going against the market maker sell model. But for now, the sell model, the interest to go lower, that is what is of interest for now up until this news comes out, and we'll see. We'll see what the news wants to give us. And then if we move around a little bit, all right, so we got this fair value gap. So if it gets above this, right, if it closes above this fair value gap, then that would push us back in line with buys. But for now, we're going to watch and see. Is this going to hold in here? DXY is declining, so it's a little sus for shorts. But overall, it looks like it's going to continue to apply pressure to the downside, or interest to the downside. There's no buying and selling pressure. Right, so we got to see what this behavior is going to be from this higher time frame. Is it because this simply looks like a retracement that could then go higher, right? It's the importance of not getting stuck on that lower time frame. And if you're committed to only shorts at the moment, trying to pick a top, basically disregarding the fact that there is this possibility to hold and then go higher, you may get caught up. So again, we're in a moment where we got to wait, but favor buy side, okay, overall. Until, of course, something proves shorts. This idea proved the shorts. So counter trend wise, it was a pretty beautiful market maker sell model. Right, and so we'll see what happens with that. There's no SMT really with that delivery. It's been highly manipulated overall, right? Buy side delivery, sell side delivery. So we'll see. Because now they've triggered in people from overnight. I believe that's London's low. No, London's low's down here. That looks pretty juicy if you ask me. That's assuming that they're going to give up this 1 hour fair value gap. So we'll see what it wants to do in here. So it looks like it's respecting this for the most part, the breaker I mentioned. So we'll see if that continues. Again, I don't like how DXY is going against the shorts. They're kind of going in the same direction. So it's a bit sus. So again, it's more reasons to sit back and wait for the news to come out and then see what price wants to do. And then we got London's low down there that looks pretty damn juicy, if you ask me. It's a pretty strong reaction from this bearish breaker. So again, nothing in here is telling us to buy at the moment. So it's all shorts for the moment. We still got the narrative still being bullish on the higher time frame because that's just the facts. That's what it is. And we don't pick tops. So we hold on to that idea. What's happening right now, though, is they're declining, going against it for now. So we're counter trend trading at the moment. You know, so your risk protocol needs to be adjusted because just in case, you know, just in case it gets back in line, because we got to be flexible. Okay, so let's see how this behaves in here. Got these consecutive up candles. It's an order block inside this breaker. So let's see if we can leave this high. This high should act as an intermediate term high if we're going to hold and continue to drop. Breakers create balanced price ranges. So if we go from this low up to the high up here, simply, you know, watching the breakers also part of the BPR that should hold. But we have all the way up until the mid portion. But if we lose the breaker, that becomes a problem, and the balanced price range to the buy side will probably be invalidated. But as long as we stay below the breaker, look at where it came. It came right to the midpoint and respected it. All right, now news is coming out in 3 minutes. All right, this is why I have not executed. So we're going to watch and see what the reaction is going to be in here. So just be patient. Don't be in a rush. Don't be chasing things. Even like I haven't taken a trade. Okay, I don't feel like I missed anything. You shouldn't either. Okay, we're in a moment in time where this type of thing can happen. If you chased price, disregarding some of the things I've been talking about, you probably got stopped out. You know. Yo, what's up, Cruz? Doing well, brother. Hope you're doing well too. Again, don't forget to like the video, guys. Subscribe to the channel if you haven't already. If you get value from the content, obviously. It helps me get in front of more people that truly want to learn how to trade the right way versus just be signal junkies, you know? So yeah, thanks ahead of time. So yeah, let's see how this is going to continue to behave in here. Again, you can't lose sight of what the higher time frame has been doing. On that 1 hour, it simply has just retraced. Okay, we don't pick tops. We don't just believe that because this came off the high and came to the fair value gap that we've now changed the narrative. Okay, it still could very easily kick back in line with the narrative being bullish because that's what the daily chart shows. It's still bullish. You know, that's what the weekly chart shows. It's still bullish. Okay, it's just went against them for the time being. So we need to build the narrative to go lower if that is going to be the case. But that takes a lot of stuff. It doesn't take like one displacement like this down there. You know, we can get back in line with shorts again if we stay inside this breaker and we close below this fair value gap. Okay, you can start to identify where your model is. If your model's not there, you don't have a trade just because you assume it's going to go in a particular direction. You have to have your model in place. If you don't, you're practicing bad habits, you're practicing impatience, and you're practicing gambler mentality just because you think it's going to do something. And we want to know almost 100% certain that it's going to do something, which, you know, it's never going to be 100, right? But we need to have certain things in line, like higher time frame PD array being respected, intermarket relationships being in alignment, you know, waiting for the news reaction so we don't get caught in the manipulation portion of the news delivery, you know, all kinds of different things, you know. You know, all that stuff is obviously encapsulated in one execution model. You know, if you're just starting out, you don't want to have 5 models. You want to have one. And then as you get better and more dynamic, more understanding of your model, you know, you can either consider looking at other things that kind of overlap or just stick to the one. You know, you only need one model. You know, I have 4 models myself because they merge together. Like Market Maker Models has every model inside of the phases. You know, the YouTube model is basically just a change in the direction. You know, it tells you when it's going to happen. So it's in buys and sells. Breakers, right? They are pretty much used to reverse, you know, at logical levels. And then there's continuation variations throughout every price leg. That's why we don't concern ourselves with missing a move. I don't care if we don't get this high. I don't care if we don't get this execution at the low. It can deliver, and then we can catch something like this. You know, this can deliver, and we could catch something down here to target London's low, which is below this red box. All right, so let's watch this volume imbalance, see what happens with DXY. Okay, DXY is also retraced. Okay, it came down into this level. So is it going to hold that? Currencies have basically dropped still too. Taking out liquidity. There's some relative equal highs up here, but again, we got to get some serious displacement to try to justify that. But for now, right, for the indices, we're still going to continue to try to seek sells if this is going to hold, right? Notice how the levels I mentioned that would turn us off shorts are holding, right? The breaker's holding. You know, we're now below this fair value gap in here, right? You know, what did I mention about that fair value gap? So the news just came out too, right? So yeah, let's see what unfolds here. Let's see if it can hold this breaker. See if we could stay below these levels. Let's see if DXY can continue this rampage. And then we'll see if it can get us down to London's low. And then whatever it does down there, you know, we'll figure it out, right? But this simple framework to try to get us down below the low here, which is very huge equal lows from London of last night. I mean, this looks like it could also just be a power 3 bearish. You know, if the DXY is going to go higher, there's also SMT at the highs. So there's things justifying that potential idea. And we've waited, right? We've waited for a decent amount of stuff to prove itself to us. And, you know, you got to decide, is your model inside that delivery right now? You know, only you can decide that because you know your model. And if you don't know your model, you got to focus there. What is your model? Are you just winging it? Or do you have everything completely outlined? We also have the regular trading hours gap midpoint that could get reached into. What did I say about this gap in here? I made it very clear today. You know, we waited. Did we miss anything? No. $20 points has already been fulfilled. 30 points is right ahead of the London low. And that's all you're looking for. No more, preferably no less. Less is kind of a waste of time, really. Yeah. Hopefully things made sense today so far. It's a great lesson in today's price delivery. From patience to understanding what price is telling you. You know, when things would change to one thing or another. Let's see what happens in here. So there's that breaker up here. We also got this in here to watch. Low, high, lower, low. So this market maker sell model was absolutely beautiful. When a market maker model delivers like this, whether it's on this time frame or the higher time frame, the low to the high, like I mentioned, should be able to act as a balanced price range if it's in fact going to continue to hold and push, in this case, to the downside. You know, market maker models are balanced price ranges when they are fulfilled, like right here, it fulfilled it. So it should have no reason to try to dig above this high in this case. You know, if it does, then you're wrong, and you got to just submit to it and take the loss and sit to the sideline, or adjust if you're comfortable and get back in line with what price is telling you. See, we should be able to quickly break down below this and hit the London low. So if we go up a little bit. What a beautiful delivery. What a beautiful delivery. Let's see if it can get down there. We are kind of hitting the fair value gap again, right? We're kind of filling in the whole portion of it. So again, if it breaks through that, I mean, it has the possibility of going even deeper. You know, again, there's a chance for the last couple of weeks we've been waiting for to see price give a rejection because it's been so aggressive to the buy side. Everybody is euphoric to the max. So it's only right for them to be punished for holding on too long and being greedy. But we'll see. We will see, we will see, we will see. Pretty strong reaction here. Again, I would, if it is going to go back to the buy side, I would like to see it sweep these first. I mean, that would be amazing because then these people would be stopped out. It doesn't have to, obviously, because there's this higher upper PD array up here. That'd be in the fair value gap. So it could prevent it. You know, but ideally, that is where some pretty significant liquidity is at. But because this PD array is up here, they may just sweep that, then start their move to the buy side. But again, for us to trust that, it's going to still need to break through some of these levels up here. Yeah, what a reaction to the downside, huh? Yeah, 30 points was offered from that opportunity. So hopefully if you executed, you were able to snag what we always talk about. 27, 28 points. Not bad. Not too bad. Watch this order block. Let's see. It needs to break through it. It can't have a very quick response. It's going to have to slide through that. It shouldn't have much rejection to the buy side here if it is going to try to blow this out. Yeah, this right here, you see this delivery? We don't like that. We don't want to see that. That's showing respect to it, right? These down candles starting to show that this could end up being a change in the state of delivery. After taking stops, the narrative on the higher time frame is still bullish, remember. So if shorts turn off, you have to accept it. Because the narrative on the higher time frame still has not justified a long-term downtrend. This is simply a retracement until it proves that it's not just a retracement by breaking higher time frame PD arrays. Okay, so this should not have a very strong reaction here. If it is, and there's an execution that someone took that they were holding, if it was to push through this up into here, you'd get out. You'd save your stop. But again, preferably, you guys take my advice and knock down the 20 and 30 points and just secured that. Because again, that is the goal. You know, we're not looking for more than that these days. And that could be the deciding factor between either this being a profitable opportunity and you having a profitable day, or you taking the loss because you didn't follow the rules. So that's how important rules are. They can be the deciding factor, whether you succeed and have a positive outcome or a negative one. Right? So this is pushing a little too much. It's getting it's hanging around a little too long. We're still inside the breaker here, right? This one that I painted. Right? But again, if it was to break up above this and take you to break even, you wouldn't hold it to see if it's going to hold through this. Right? You would close the trade out and you would just move to the sideline. Because the narrative is bullish. Okay, so let's see what this does here. And then if if that did happen, right, at this point you would have been done. Break even. Or slightly, little bit of a loss. If you held it, right? But if you held it up to the 20, 30 points and got out and submitted to what I teach you, you would have been profitable. But say you did get stopped out here and you're like, damn, okay, well, what if it does go lower again? Well, okay, this is a run on stops. We're still inside the breaker. And if it breaks below this low, you still got London's low to target. So that if it leaves a fair value gap, you could then take potential execution in there and, use this wick as a rejection level, so on and so forth. So that's continuation variation, waiting for rules to kick in to help confirm that it's going to continue to go lower, right? None of that is fully confirmed right now. So there's no opportunity right now, unless you wanted to pick the low, be aggressive, try to pick this as a buy side delivery, and then just try to ride that. But it's aggressive. That's aggressive. Obviously, the rules are there, right? Run on stops, higher time frame, still bullish, change in state of delivery, fair value gap. But again, it's going to be up to your mindset. Are you aggressive like that? Do you accept that aggressive perspective? Right? It's completely up to you. My preference would have been this. So yeah, we got this decline in here. It's breaking through these levels, right? It's back above this fair value gap. The first presented fair value gap for the day is here. Actually, I think I'm going to put it up there, actually. Yeah, very, very wild swings today. Whipping both people out. Very difficult for new traders to understand what is going on. There's been a lot of people sending me messages about them getting stopped out, them thinking that the market's changed. They don't know what the hell's going on anymore. It's a lot of that going on these days. And this is why. It's whipping people back and forth. It's taking advantage of the announcements, the cracks in correlation, right? It's a result of what's happening. Plus the summer months. Big money, for the most part, is on the sideline. Proof of that is also here with the zero news, 3 in a whole week, or like a whole 7, 8, 9 days, right? There's 3 news events in 9 days, right? That's a very slow week ahead of us. Yeah, if we're observing this, right, again, you'd have to wait for a shift to take place to further confirm that this breaker is going to hold. Right, so it'd have to shift back below these lows, leave a fair value gap, or whatever model you use, right? If it gets below this, it's going to have to respect this down candle. If it gets through the mid portion of that, that's invalid for you to participate. If this is like a breaker to you, right? There's an argument for that, right? We're also inside this breaker. Still holding, right? It's still holding up. Nothing in here is screaming to buy, right? Again, I need this to be broken, to be invalidated, right? So it's going to have to get up here. And then we could, at that moment, mark this off as a potential market maker buy model, right? Sell model to market maker buy model if it's going to go higher. If it just went lower to go higher, right? That movement lower was manipulation, plus obviously this as well, to set that move up pre-market open, going into the news. And then because we're on the other side of the news, if it does decide to break higher, right, get above this high, that's an intermediate term high. If it gets up there, then we could then look to frame out something to go to the buy side. But for now, right, none of that's in place. And what we see here currently, it's not comfortable enough, right? It's not obvious enough that it's going to want to seek sell side. It's going to have to break down. We got down below this, so let's see. It's holding this, right? So if DXY was to rally, I'd be pretty damn confident that we're going to blow this out. My objective is still here because these upper levels are still intact. So there's nothing to fear, you know, unless you're going to not trust yourself because you overtrade and over leverage all the time. You know, that's how you don't trust yourself. You know, you never want to trust yourself, overtrade and over leverage when you know you shouldn't because it hurts you more than it helps you. You know, do that enough times, it's impossible to build trust. It's impossible to hold on to the belief that you can do this. You know, so again, I can't state it enough. I talk about it pretty much every call, but overtrading and over leveraging is a non-negotiable no-no. Okay, if you want to succeed, if you want to, you know, be a gambler, you know, go ahead and keep doing it. You know, the 95% of people that fail is a very welcoming community. You know, they want everybody to come in and fail. So, you know, it's up to you to break that. So, big displacement. Again, that's making me feel like we are not done yet. Still holding this down candle, this continuation variation of a bearish breaker inside the larger one. So yeah, it's looking pretty solid for now. All right, we've got this fair value gap. If it overlaps it with that one candle, returns into it, that may be another reason to see price go lower, right? That'll be a balanced price range. If this is going to hold here and go higher, it should not have to trade back into this type of level because it should be a BPR down here on a small scale or an order block, right? If it's going to be bullish, it should hold on to that, right? It should continue to bounce. You know, maybe it does, right? But if it doesn't and it drops below it again, we're going to slide very easily down to the London low. It's very, very obvious. And that'll also get us down below this as well, especially if DXY is going to continue this rampage, if the currencies are going to continue to drop. See, we got the bonds going against that, which is it's an issue. You know, that's a red flag on the other side of shorts for currencies and the indices when the bonds go higher, because those assets will follow the bonds, or they're supposed to normally. This year it's been a lot of lack of correlation. Yeah, they could fake a market maker buy model if it fails, right? Say it delivers up looking like it's going to deliver it, and then all of a sudden it fails to complete it. That's a failure, and that's a further confirmation that price is going to continue to go against it. And just further justifies in the moment that what you're doing is valid. Yeah, so it looks like it could be the market maker buy model, right? If it was going to get up above here. I don't make the assumption that it's going to be a market maker buy model until it gets up here. So I can't even fake it unless it gets up here, right? Because it hasn't set up the phases yet, right? It hasn't given you the smart money reversal. It's kind of just working within this, kind of accumulating in this this fair value gap. This pretty strong reaction away from that. Yeah, I mean, there's obviously some people that can catch the market maker buys and sell models if you're in line with the narrative and say it hits a PD array like it does here, right? You could frame out that, okay, this is reasonably going to be the market maker buy model setup, because there's a higher time frame PD array that could hold it, which could be the case if it breaks above this, right? But you're not going to know until we get this portion laid out and understood, and then watch the delivery in the PD array that's going to set up the market, the smart money reversal. You know, a lot of times you're going to catch market maker models after the smart money reversal, so you can have the information there to confirm it, you know. But you can get in front of it sometimes. But again, that's a skill set that requires you to have a high understanding on that higher time frame, understand bias and narrative like we do, like I teach, and experience identifying that one model, right, over and over and over. I think I've identified probably that like over 10,000 market maker buy and sell models just from studies alone, let alone the live engagements from the last 6 years. So it's a lot of work, but so is the alternative. You know what I mean? So confirm it either way. You want strong, yeah, of course. And if you're framing out the market maker model, you're trying to see a strong displacement away from a higher time frame PD array that's in line with the higher time frame narrative if you're looking for a buy model. Market maker sell models can happen to set that up, right? If you're going to still want to go higher, market maker models to the downside, if they're going up to go lower to set that move up to then go higher, you could frame out like we did today, the market maker sell model to get down to the PD array. Then once the PD array is met, it'll kick into a market maker buy model if it's going to go use that PD array to go to the buy side. Does that make sense? I hope that makes sense. It's like a very advanced navigation tactic with understanding market maker buy and sell models. We're always in a market maker buy or a sell model. If price is retracing on the daily chart higher to go lower, you're in a market maker buy model that fails, and then it's going to drop and create a market maker sell model to deliver the real move to the downside if you're bearish and navigating a retracement. And then if price is going lower to go higher, that down movement is going to be a failure to deliver the market maker sell model. But then when it's ready to go higher, it's going to create the market maker buy model back in line with the buy side delivery. Right? That's stuff that people don't understand about market maker models. And it's the exact reason why I love them. I fell in love with them when I first just got exposed to them and that way of thinking. Yeah, it's been a very sloppy delivery post the news, or after the news. And then DXY is now given a lackluster response to the buy side, so it's not making me feel too confident that this is going to get down here. We may just be accumulating in this PD array on that 1 hour chart. Seems like it's accumulating in there, right? And we're still in a higher time frame bullishness, right? So it's delivered lower as a retracement into the PD array on the 1 hour. That's what this is. And now it's stalling, it's stuck. So I wouldn't be surprised if they leave this and then displace, especially with DXY given this huge decline, which is, it's reasonable because it's been so aggressive to start the week. Monday has been just rapid rampage to the buy side, so retracement is definitely something to be considered. We are still respecting this bearish breaker. Right? It did offer, slight delivery. But given how it's just stalled in here and it's taking forever, it's less and less and less likely that this is going to blow this low out. Right. Still could, but it's becoming less and less likely by the minute. Every minute that we stay inside this, it's just seeming more and more like accumulation in that 1 hour fair value gap to then go higher still, because the narrative is still bullish. We've just had a bearish retracement and market maker sell model like I talked about. 20 to 30 points was offered in the move here, targeting the low, right? That execution on the 30-second chart. I mentioned when we got below this, it'll probably dig lower. It did in fact do that. Now, whether you trusted this or whether this was in line with your model, that's another question. For me, that's in line with what I like to do, right? and now we're inside this, and it's just kind of, you know, holding off, right? It got below this wick, like I mentioned. It should be able to hold if it's going to go down there. It's still somewhat showing evidence that that's the case. So there's still a chance that it could get down here real quick. Once it gets down there, though, I don't think it's going to spend much time down there. If it gets down there, you know, and if we get displacement from this level above these highs with DXY declining, that'll probably send us up into this market maker buy model framework that may unfold as we invalidate this potential breaker. This breaker, though, is still intact, right? This idea to go lower is still intact. It's just less and less reliable. We got 1, 2, 3 lows now. So it's going to need to speed up, blow this out, and then whatever it does below this, we'll have to obviously observe. We almost have an indecision candle for the daily candle. This is the open price for the daily as well. So it's an indecision candle. You see the daily here? We got a big wick to the buy side, got a little bit to the sell side. Hasn't really done much. You know, it's just been back and forth. But of course, you know, we've been able to identify many details this morning, talk about many different things. So hopefully you guys have been getting value. Appreciate y'all for liking the video. Definitely helps me out and helps me reach more people. You help me help other people by liking the video and subscribing to the channel. So thank you for doing so. Yeah, I hope you guys have gotten value so far, right? Up until, you know, price swept below this. I mean, even inside this delivery to the buy side, we were able to anticipate it blowing that out. And then we also talked about this delivery, which it's played out. Now our full target we identified from the start of the day has now been fully taken out. So this is going to be something interesting to watch. So let's see. Can it get a little bit more speed, try to blow it out, or is this going to now be used to get back above this 1 hour fair value gap? Use this delivery as just like a simple wick through the fair value gap on that 1 hour, and then deliver to the buy side. You know, we'll see what happens moving on into the next macro. But yeah, entry in here, if you held through all this, you would most likely, at least in my opinion, you should be out of the trade already. Once it hit this, it should have been done. Because now it's taken out the initial liquidity I wanted to see taken. Now people from overnight, from London, are now in the market. You know, either that or you've now rushed your stop to break even or in a little bit of profit. Or taken off most of your trade and now you just leave a runner. Which, you know, we'll see. We'll see how excited this wants to be. Very high resistance. I think Mike mentioned that in the chat. Yeah, it's high resistance what we're witnessing in here. But yeah, you gotta be cautious. You know, it's been a lot of high resistance happening lately. So it looks like we have a 3 drives pattern. It's going to turn to a reversal here. So we'll see what happens. Nothing too exciting, except the fact that we called the bias correct, and if it got to our target yet again, and the opportunity that was called out here, profitable. If you held through it like a savage, maybe put your stop up there to be conservative, demanding the London low be taken, you would have been able to squeeze out a little bit more. But I don't think it's necessarily too worth it, right, to have sat through that. It's what, like 10 points more? 13 points more? It's going to have to hold this fair value gap in here if it's going to try to go lower again, but I think this is going to be the time when it turns back around. Yeah, we'll see what happens. Massively high resistance. All right, so let's see if this delivery here wants to do what I mentioned earlier and use that as the opposing liquidity to pair smart money with the potential for continued buy side. Yeah, very, very, very high resistance. You could see it from here too. Pretty deep retracement. Got this down here, right? These consecutive down candles, changing the state of delivery once we got above this. And now price is retracing again after purging out the highs with SMT. Yeah, hasn't fully committed to really much of anything so far, aside from the market maker sell model that pushed price, ended up pushing price below London's low, which was here. I talked about this at the very, very beginning of the session. I said if we were going to go lower, it'll probably reach for that. And what do you know? Ended up reaching down for it. So yeah, hopefully you guys were able to take away the 20 to 30 that we identified and what our objective was today. Otherwise, you probably got stopped out. Or if it didn't align with what you like to trade in terms of execution, hopefully you were able to sit out and then learn what we were talking about today. So let's see what happens in here. London's low's been taken, like I said, so let's see how it's going to behave in this. They've definitely engineered some liquidity up here, but again, the breaker should be a balanced price range if it's going to continue to drop, right? The market maker sell model that's completed from this low to this high should be able to hold price. We should not continue to go up there. We could see that that's being respected right now, right? The delivery is not telling us that we could pick this bottom just because it, maybe shifted on the 15-second chart, right? Nothing's been invalidated to turn off the shorts. So it's just accumulating. It really, really feels like this is accumulating. This is accumulation, high resistance style delivery inside of a higher time frame PD array with a higher time frame narrative that's still, in this case, favoring possibility for buy side. It's starting to kind of sway a little bit. We'll see if that continues up until tomorrow because we got the big news coming, and then we also have NFP this week and FOMC conversations. So all of that's going to determine, are we going to continue and rage higher still, given the data? Because it's going to have an impact, because it's just the real world back end information, aside from how the algorithm prints and how it uses liquidity and inefficiencies. The news is used. They use it for sentiment and reason to push price in a particular direction within the algorithm's delivery, right? So it all works hand in hand. It all has its place. So yeah, DXY is giving a pretty strong push. Let's watch this high up here. Whoops. Let's watch this high right here. This low to that high, we should not violate the mid portion if this delivery is going to continue to stair step lower and support this breaker. It shouldn't have to come back up into the breaker 5 times. You know, it just shows that there's a very low willingness to try to turn around. And it's because of the trade deals and the good news and just a simple fact that we are in a buy side narrative, just simply giving a retracement, at least for now. Yeah, I can say up until this point, today has been another successful price navigation lesson for you guys. So again, I hope you guys have paid attention to the important elements we talked about today that led us to this low being purged. The opportunity that was talked about in there that offered 20 to 30 points. And then, you know, the breaker, the market maker sell model. You know, notice how we got right down below the open price. I think that we've now created, we now created a new low of the day. Right? Very, you know, tight daily candle up to this point. Very small bullishness. It came back down and purged these people out. So now we took, we kind of peaked above this high here. So notice how from this low to that high, right? If you saw this on the upper time frame, if we move up, right, these consecutive up candles, see if we can find an order block. I guess you could say that's the order block. So the midpoint has not been taken out, or you could simply just use the low here to the high because these are consecutive up candles, right? If it's going to continue to hold, it should be able to stay below that, right? We got buy side delivery, sell side delivery, and unless it's going to go higher, it should be able to continue to support things like this and just slowly climb its way down. We're at a moment where price is stalling now. You know, it's all this delivery is what accumulation looks like at a level, especially in a higher time frame PD array. You know, this is high resistance. It's accumulation in a particular higher time frame level that could still be used to send price, in this case, to the buy side. Okay, because the daily and weekly chart does not promote long-term bearishness right now. You know, we need evidence. We need a lot more than just a retracement on the 1 minute to set us up with, you know, us invalidating a higher time frame direction. It's just simply from the context of retracement, you know, and now we're in a level that's stalling, right? It's holding in there. So what's it doing? It's accumulating positions in here. And if DXY declines and we're still not interested in going lower for the indices, then we'll see this eventually, maybe in PM session, look to continue running to the buy side. All right, but we got relative equal lows down here too. So if it was to break down below this and DXY was to accelerate once more, it could get excited enough to come all the way down. I mean, look at this regular trading hours gap. The thing is massive. All right, so if you go to the regular trading hours, we still have a huge portion of the gap that's available. Right, so they could want to dig down there if they're so interested in declining today. You know, and that may be the case. You know, they may do it. We're going to need this to really break down, right? And show that it's not going to support this 1 hour fair value gap if that's going to be the decision we make. You know, but for now it's not. You know, it's just not the case right now. It just looks, for now, given where we're at, we're still inside that 1 hour fair value gap. So it's just accumulating in there. It hasn't broken out of it. So it just looks like it's just, you know, hanging around. High resistance ahead of a crazy news event tomorrow and the rest of the week. You know, the whole buy side delivery may get upset though when rates come out, when NFP comes out, depending on the numbers. So those are times when price changes. You know, those news events have a strong enough volatility and impact that it can upset an entire trend, assuming that it breaks through our invalidation levels. You know, it may have a sporadic move, but if our invalidation levels structurally are not violated, we will stick to the narrative going to the buy side. You know, bias though, like this, for example, this bearish bias is still within the bullish weekly and daily time frame delivery or narrative, right? So you got to keep that in mind. That's why shorts in a bullish trend should be cut to half risk, because there's a risk of this happening. You know, getting back in line with what the daily and weekly chart is showing. That's a hard thing to submit to, especially if someone that, for someone that's just been trading on the seconds chart or 1 minute or 5 minute or even the 1 hour. You know, if that's all you know and you haven't spent time, you know, navigating these higher time frames and seeing how the lower time frame just simply works and sets up within those higher time frames, you'll get fooled a lot. You know, you'll get it wrong a lot because, you know, you'll trade against the people that understand what we're talking about, you know. So now price has gotten above this. It's pretty strong reaction, still supporting the fair value gap. Now, in order for me to want to short again, it's going to have to break back down below this fair value gap and then use it as resistance. And in that case, we still got to ride down below here if it was to get down there. Otherwise, it seems like we may start to finally kick back in line with price continuing to go higher. We're sideways consolidation, but I'm going to favor the possibility for the higher time frame narrative to kick in unless it proves me otherwise. You know, what proves me otherwise? Us closing back below this purple line, which is the 1 hour fair value gap. And we got the new week opening gap down here too, so we're above that. Seems like we may have set the new low of the day. And we are kind of working within this bearish breaker that was set up, so we'll see. You know, this breaker will become a whole lot more significant if we were to break back below this 1 hour fair value gap. That may be showing us early signs of what's to come for NFP and the rate announcements, because now we'll be breaking through some higher time frame PD arrays. What if we just witnessed Judas swing and then now remove may be delivered? That could be the case. You know, it may have been all of this as the Judas, right? Normally that's not the case. Sometimes it is. Like if this was to kick back in line with the buy side delivery and start setting this up as a market maker buy model, could be the case. It's not, you know, overwhelmingly common that it does that. It takes forever. The Judas swing generally happens at least before the 7 o'clock time. Like the latest is at the 7 o'clock, 10 a.m. Eastern, because that allows for you to see the 6:30 open, right? The New York open, the AM session open. Sometimes that creates, you know, the Judas swing as well. Like it'll set the low of the day sometimes, or the high of the day. But I'm not fully behind that, especially with this. You know, if this was going to start showing early signs that it was going to hold and go higher, and this potentially would have been the Judas, it would have held here and pushed above. It wouldn't be slamming through like this. This now has me fairly confident that we're going to then look to try to finish off the rest of this regular trading hours gap. Given the news, though, it may be asking for a lot to try to get it to run that much. But we'll see. You know, we got this low, high, lower low. So if this is going to continue to drop, it's going to have to stay below this. If it was to break outside of this pattern in here, this, you know, delivery on both sides, possibly creating a bearish breaker for continuation. If it trades outside of that and then gets above this, that puts me back in position to try to catch a buy or to frame out and observe the buy. DXY is very whipsawy today. It's going. Look at how it looks. Strong movement back and forth. You know, doesn't know what to do right now. But it's been accelerated and broke through our 3 PD array rule, the fair value gap in here, the order block, and now swing high. So that again sets the stage for us to look for this secondary level or the upper level. Right? But yeah, if you go look at anybody else that's streaming, I can guarantee you they've blown their accounts. They've lost many, many trades. When I gave one trade in here, you know, we talked about, you know, I think one other opportunity, but we talked about one trade in here, one objective, the if-then scenario that would turn the opinion for price to go lower off. And yeah, we've waited and waited and waited patiently, mapped this as a market maker sell model to blow out the low. Once it got below that, we anticipated this low to be taken. Took a long time to get there because it's high resistance, but eventually it got there. And now we're observing this. You know, we're trying to see, is it going to hold here and start giving us more evidence that it wants to push lower? This is not a time to overtrade and over leverage. It's not a time to rush into things. It's not a time to just assume anything, because it's going to fool you. You know, I'm sure it's probably fooled everybody. They probably don't know what the hell is going on. You know, but we're rooted in the higher time frame. So if it supports the buys, great. If it was to try to drop and support shorts, short term, to try to maybe attack this, great. That doesn't upset the higher time frame narrative yet. You know, it is definitely digging a little bit deeper than I would prefer, right? But if we go to the daily chart, all right, we look at what's taking place in here. That gap that I highlighted for the regular trading hours gap, it's down here, right? You see how it highlights the box? It's still within this this area. It's still above this level that turns off my interest entirely to go to the buy side from the higher time frame. Okay. Very gappy, lots of gap risk, you know. So yeah, I guess we could put a ribbon on it for today. I think we've talked about a whole lot. Yeah, remember what I said about this? Watch that. If this is going to target the lows down here, or this low, and then the regular trading hours gap, the rest of the gap, which is what this box is, we're going to hold that level right here. Right? If it breaks down below this low, you take this low to that high, watch the middle portion. And if it stays below that, there's no reason for you to try to worry about price going higher too strongly, right? Don't worry too strongly if it holds below those levels. But then if it was to displace and get back above this box up here and break through the mid portion of this, this low to that high, that sets the stage for problems in terms of favoring this area down here getting targeted. Otherwise, it should be able to hold and get down there, you know. DXY is rallying still. We're in a moment where we're trying to gauge whether we're going to now transition from bullish to bearish because of the COT idea we've been talking about for weeks, months at this point. So we may be seeing that manifest. But again, we slowly change our opinion on the higher time frame in terms of narrative. We don't quickly do that, okay? Because then that'll make you flip-flop and you'll be confused. And narrative long-term, on a quarter-to-quarter, month-to-month basis, does not change in a day unless there's a news event like FOMC, NFP, or something dramatic like a war or something that just explodes, breaking through multiple levels on the higher time frame daily and weekly chart. You know, otherwise, you know, without that stuff taking place, you want to hold on to your ideas on the daily and the weekly and the monthly. Okay. So yeah, so continue to watch this. All right, this is a potential bearish breaker. Okay, continuation, variation. All right, run on stops, break down below the low, consecutive down candles, map that out, We have up until the midpoint, right? Notice how it came up, hit the fair value gap, and it declined. You can also make the argument that this is a YouTube model, has the YouTube model rules within the breaker. This is why you only need one model. A lot of this stuff overlaps and gets you to very similar areas. It's just maybe you have a different perspective. You know, that's why ICT has so many models, and they work pretty flawlessly together. You know, a lot of it takes you to the same place, which most traders don't know. Most of these elite ICT traders, they don't even know that. You know, especially if they've never mentioned it. If they've never mentioned it, they don't know. You know, so be on the lookout. But yeah, so I guess we'll put a ribbon on it. Watch this level. Like I said, this low to that high, that's now something we have to watch the midpoint on. And then the upper portion of this breaker candle here, or the breaker pattern with the down candles. If it was to break above here, that sets the stage for price to maybe want to reach up into, you know, this high. If not, our objective is to blow out the rest of the regular trading hours gap. All right. So yeah, I guess I'll leave it there. Again, I hope you guys got value from today. Let me know if you have any questions. We will be live again tomorrow in my private group, as always. And for you guys here on YouTube that are part of the YouTube family, I will catch you guys either in the free Discord, if there's something to mention, or I will catch you on Sunday for our weekly prep call. Yeah, all right, guys. God bless, and don't hurt yourself, okay? Just be very calm and relax. You're not missing anything. All right.